Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit like we have so far in 2014 as well as 2013. Profits no matter which way the market goes. That's the key, and that's what we do here using our proprietary strategies. Today's date, folks, we're talking about Wednesday, February 12th, 2014. Markets are very quiet today, folks. A couple key levels that we hit. One I talked to and gave out yesterday. If we just scan back and scroll back, you can see that green trend line that we hit at the highs of today. Look at what that coincides with. It's amazing how this stuff works. Perfect gap fill. So there was a gap fill going back to really about late January, almost about 3 weeks ago, I would say at this point. And that's what the market slammed into. Yesterday, I talked about that being a key possibility, and sure enough, that's exactly where we went to today. Off of that level, the market's actually reversed and went negative before bouncing off the 50 MA. Now we're kind of holding steady right on these two moving averages. Anytime moving averages coincide like this, where the 20 kind of meets the 50, what it tells you is that things have gotten very quiet. And if you look at today's price action, it really has gotten quiet. Volume 65.5 million on the SPY, which is super light. And you might say, well, why is the market pausing here? Why is it quiet? And I think the answer to that is simple. You've had a big gain in the markets, right? Huge 4-day rally in the markets over the last few days into last week. And the markets now haven't had a major catalyst to push them up or to even push them down. So we're kind of just sitting here void of good news or bad news. And the markets are kind of consolidating. They're digesting their gains, essentially. And I think that's the good way of describing it here. You're just digesting it, you're pausing, and then what we're going to look for in the coming days is, do we have good news to propel us even higher? Maybe back to the all-time highs on the SPY, which is pretty close at this point, only about $3 away or so, just under $3 away. Or do we have a bad news break where the markets start to fall? Now, I'm in the camp personally that I think we're going to start to pull back again. I don't know if we'll take out the recent lows from about 2 weeks ago, a week ago, but nonetheless, I do think we will have some sort of pullback. All right, if you think about it just logically, let's just use logic and not think about the emotional side of the trade, which is, yes, there's a big rally, and a lot of average investors get caught up in that, emotional side. Oh, I don't want to miss the next big move up. I got to jump on board. Market's going to go up and up and up. This was just a small pullback. But if you actually take that aspect, that emotional hype out of the market, just look at the facts. What's changed in the last week? Well, really nothing. U.S. economic news is still mediocre at best. The Fed is still cutting $10 billion, and Janet Yellen yesterday said she's going to continue to cut that money. All right. Then if you look at Asia, China is still weak. Economic numbers are weak. We had a decent economic number last night, but for the most part, it wasn't good enough to really change any outlooks there. And then you have the currency issues in Turkey and in Argentina and other South American countries. Even the Czech Republic, I think, had some major issues in recent days. And none of this has changed. None at all. The only difference is, people are hyped up a little bit about Janet Yellen testimony yesterday in front of Congress and a few other things, but it's very minor to say the least. So I do think that it's important for us to kind of recognize those factors. And I think ultimately, as soon as there's some rumbling, as things quiet down after Janet Yellen was yesterday, I think you're going to see, some rumbling out of some country about some currency. And then before you know it, things are going to start to drop again. Now, again, the big question will be, do we see a big drop where we take out these recent lows down here, or do we just see a retrace? And what I like to do, folks, is just look at it in stages. So right off the bat, the first pullback is going to take you to this 180 level on the spiders. All right, you're going to pull back to about 180, and my guess is that could start as early as tomorrow, or maybe even later today. But you're not going to see a big drop initially. The momentum will carry as the market falls, because so if the market's down 25 cents or on the spiders or 50 cents or a dollar, that's not major. But once you get over that dollar amount, I think that's where the momentum takes over and people start to be fearful. Oh, here we go again. Here's the next leg down, and that's when you'll see major selling come in and kind of that whole panic set in. But first level on the spiders on any sort of pullback takes you to about the 180 Pierce on the SPY. That's the 1800 level on the S&P 500. Second leg down would take you to this level, 177, 177.50 level on the spiders. This was a former great level. And then finally, if you break that, then maybe you retest this 174 level. But those are the major levels along the way that we're going to be watching. All right, if the market's able to kind of consolidate for a few more days, it might have one final chance to fill this gap up here, maybe even test the highs around 185 on the SPY. But that 185 level, if you recall, in late December and early January, as I nailed the pullback that was coming with some great trades and great profits for Research Center members, what I said to them was every time we're up in this range, this 185 on the SPY, we're seeing major institutional distribution, which is institutional sellers coming in and just pounding the market down. You can see it basically so obviously. I mean, if you couldn't see it, you were basically blind. So I'd be very curious if we do retest those levels, do we see some sort of rollover? Do we see some sort of institutional dumping again start in? Now, again, one thing I'd like to point out here that kind of makes me in that camp that thinks we pull back in the not too distant future is that the volume is very light on this upswing. So yesterday we had a huge update, right? But in all fairness, volume was dead yesterday, and today it's dead again. I mean, we've done 66 million now, and it's about 2:30 p.m. Eastern time. So you have to say to yourself, well, when the volume's light, what's that telling us, right? And what that's telling us is that there's no institutional involvement. If there was institutions buying like crazy right now, then you'd see, huge volume on the markets to the upside, and that's a healthy market. All right, that's when you want. That's what you want to see. You should always be worried when the institutions aren't piling in the trade, and you are essentially. And again, listen, I'll be the first one to admit I was long. We were short up here, covered our shorts down in this range, went long down here, and now actually, as of today, I moved out of my last long play, which was RIG, RIG, and you can see it's pulling back. We moved out of it right here at the highs of the day, which was a great sell. We only took a small gain on it, but nonetheless another profit in our pocket, which is all you want to do. You just want to be consistent. It doesn't matter if you make 5 pennies or $5 on a trade per share. You just want to be consistent, and then the gains ultimately add up, and as you get more fine-tuned and so forth. But the point is, I've just continued now over the last couple days to slowly accumulate shorts. Another short I accumulated today, I put it out in the Research Center as a swing trade alert, and that was just a good one as well. Already in the money on that one as well. So the key is if you fine tune and you understand the methodology, you can really pinpoint these levels and make quite a bit of money. And again, the beauty of it is, I think I said this yesterday, is that, we were short at the highs in January, covered at the lows in January going into February here in early February, and then we went long and we captured the move up here. So really what you're doing is you've captured 5-7% decline in January, then you went long for the 3-4% bounce here, 5% bounce, and you're taking those profits, and now you're flipping it around again. And if you add up those gains, and imagine doing that all year long, you literally can make hundreds of percentage points. I mean, just a good example, I think I said this yesterday as well, that last year, net gain, if you added up all the percentage winners minus the percentage losers of every trade we gave out in the Research Center, Hot Charts, and Alerts, and again, by the way, there's a free trial for the Research Center, it was over 500% gain, net gain. Now, again, that's assuming you put all your money in every single trade. If you just took 10%, just a small percentage of that, and you put it in each trade, you made basically 50+% return on your account. Think about that. 1 year, 50%. And it's funny because most hedge funds made like 7%, 8% last year, and we did over 50 if you just did that metric. And if you put 20%, you would have made 100% on your portfolio. So it's really up to each individual. But I think the point again is to just say that that's during that year when it was a straight up year. We were able to outperform the S&P, outperform all the hedge funds. This year you're going to get some volatility, and this year we can knock it out of the park 10 times beyond that because the volatility already you're seeing, the average investor who's just buy and hold this year is going to be down to flat while we're already up 10% or so for the year, 5-10%. And again, match that over the course of the whole year, it should be exponential. It should really be exponential. Okay? All right, so let me just see if there's anything else I want to talk about. Amazon's taking a beating. They got a downgrade today. Let's just take a look at this. I have no interest on Amazon until maybe it gets to the 200 MA. I do see a little bit of support right here at this gap fill on Amazon, but I'd have to see. I might want to wait for a pierce of that level to the 200. There's this little pivot high, which is also intriguing to me, which is right below the 200 right here. So these are your two levels on Amazon that I'll be keeping an eye on, but that thing is going to continue to fall. Don't let that fool you guys, because Amazon, again, reality's finally setting in, and I think they really made a big mistake when they talked about raising the Prime membership of Amazon a bunch. Not necessarily because it won't make them a little bit more money or vice versa, but the issue is it disclosed that they don't think they can make money in other ways. If they were making money hand over fist and profits hand over fist in other ways, they wouldn't need to raise that. All right, because it's going to hurt their demand a little bit. I have Prime myself, and I don't know if I'd pay $120 for the few things I buy on Amazon every year. I don't know. I'd have to make that decision. But it shows to me that they were saying, listen, we got to start turning more money from these other people that are paying this flat fee. And I think that could be a big mistake, and it could be an eye opener in terms of what's going on. By the way, markets are inching down just a little bit. Spiders have actually turned to the negative side. This is getting interesting because towards the end of, let me just refresh this chart here. But towards the end of the year, towards the end of the day, excuse me, I'm very curious to see where we end. If we end below these moving averages, you could be looking at a very high probable down day for tomorrow. So these little things definitely kind of a heads up for us, and I do want to monitor them very, very closely. Okay, what else do we have here? Let's see. Yeah, I think that's about it right now. I'm still, again, I'm accumulating some shorts in this range. That's all you need to know there. If you want the exact trades, you join the Research Center. Take the 7-day free trial. Apple's flat on the day, up $1. Boeing's down $1. JPM's gone negative. Goldman's down 67 cents. Chevron's down. Exxon's up slightly. For the most part, it's matching up with the markets. You have a few stocks down a little bit, a few stocks up a little bit, and then obviously the outliers out there. All right. On that note, folks, again, come join us here at themoneystocks.com. And just again, it's all about profiting for life. Every investor should have a goal of being able to handle their portfolio and make, thousands of percentage points over the course of their lifetime so they can live the good life in retirement. And that's what we offer here, the insight to be able to do that instead of being one of the sheep and, essentially having your money taken from you by the institutions. Take care, guys. Talk to you soon.